how is the cyber insurance world going to become, you never want it to become commoditized like auto insurance, but how will pricing become more consistent? And the answer is, I don't know. I don't think anyone knows. But the good news is we are in the information age. Where we are on the information age in terms of how long it will go, my guess is we're just at the beginning. But with that comes all kinds of data, which will help us better price this consistently. Look, no one loves. Insurers don't, believe it or not, insurers don't love it. Certainly buyers don't love it when the pricing is just bouncing all over the place. Yeah. People would love it if it was just steady and stable and understand that costs go up so the premiums go up. But right now, it's a little bit of the wild, wild west. There is some stuff happening. Like I'm not an IT expert, but I don't even know. When was ransomware really, when did that happen? Like 5, 6, 7 years ago that it was ever
first started.
Yep. And now it's commonplace.
Yep.
And
there's a whole economy around it.
Right, and to Jim's story earlier, analogy earlier of using a jewelry store as an example of risk and what's been done with armed guards and all kinds of other things to mitigate risk. You know, my hope is for the buyers and for all businesses that someday we will have in place technology and other ways to control potential losses in the cyber world. Right now, it's frightening how not only the frequency of losses, but the potential severity. I mean, it becomes a national security issue at some point, right?
Yep, absolutely. So even though we are just at the beginning of it, that really is what Trava's vision is all about, is to be that data-driven cyber insurance company.
Right.
With real data.
And I think, I don't mean to speak for the founder and CEO, but be one that, but I will, to be a company that can use that data, use its technology to better cloak its clients with protection that along with insurance. You know, I think one
comprehensive cyber risk management.
There we go.
Love it.
Right. So I think this is exactly what we were talking. That's a great question, and until we have enough data, until the industry has enough data to know whether that SaaS company that's serving small to medium-sized companies has a better risk profile than that company that's serving Fortune 100s or Fortune 50 companies, it's only then will the pricing begin to rationalize, right? Because right now, you could say, we think there are going to be losses there because they're serving 1 million customers, which would make sense, right? You have a chance, you have 1 million chances of something going wrong. There may be another argument to say, yeah, but they're all so small. There's no way if we carry $1 million deductible, if we're that SaaS company, or $5 million deductible, that there's ever going to be a single cyber breach or cyber problem at any of those small companies. On the other hand, you might say, well, if I'm serving the Fortune 50, don't they have all those protocols in place, so this shouldn't be a big deal? And the answer is there just isn't the data yet to figure that out. Well, that's a great way of putting it, is the liability has not yet been proven.
So I have a practical example to that question. We had a customer, weren't able to help them, and you'll understand why. They had about $1 million in revenue, a software services company. They had a big potential customer, big potential client contract. That customer wanted them to have $10 million in cyber liability. Yeah, you're shaking your head. You know what I'm talking about.
Yeah.
They wanted them to have $10 million in cyber liability coverage. We go to our carriers, our underwriters, they say, well, how much revenue do they have? About $1 million next year. And they want $10 million in coverage? Not going to happen.
Yeah, I would just add to that. That's a great sort of one other tidbit I would throw out for those of you who are buying or involved in the purchase of cyber insurance. And to Jim's point, there are only really 3 reasons why anyone ever buys insurance. One is because they are legally required to carry it in certain cases, workers' compensation, automobile liability in all states. you need the coverage. The second is because you're contractually obligated, and the third is because you've built up an asset and the insurance, the transfer of risk is attractive enough that you want to take it. But come back to the second one, because the caution I would throw out to you is many of the companies you're doing business with also would not have raised their hands if you said, do you understand what cyber liability insurance is about, cyber insurance is about? And so they say, they're box checkers, and they say, we need you to get $10 million of cyber insurance. And you're like, I'm not doing that because it's way too expensive, or I'm a company that only has $1 million in revenue, and there's no way they'll give me that coverage. Some companies will not budge on that.
Yep.
And you ought to have a broker or someone who can jump in with you, talk that client down and say, you don't need me to get 10. You only need me to get 1 or 2, and here's why.
Yeah, grabbing a broker and having them explain that to the client that's requesting that is huge. Limit requests are a massive thing that agents need to be providing value on. So if you're having that issue, where you're only making $1 million, or you're not even profitable, and you're getting a $10 million limit request from a large client, call your agent. And if you don't feel like your agent can do that for you or doesn't have the relationships to get you that limit, then we have some preferred agencies that we work with.
Yeah, you ought to find one that you can trust, because there are plenty of agents in that scenario say, I need $10 million of coverage. You go, yeah, here we go. We're going to get more commission, more premium.